Traders, welcome back to another price action trading lesson. Before we're gonna dive into today's lesson, we're gonna cover how to follow price action rules and how to combine those price action rules to identify high probability setups. Basically, what to look for when we are trying to navigate the markets, understanding pure candlesticks, relying on pure price action. So as price action traders, we always want to make sure that we understand the context and we know where the key entry point is. Because high probability setup is considered a high probability setup when if you combine all the price action rules, it will match your analysis and you don't really have to second guess yourself. Now, of course, market and overall trading is navigating in the sea of uncertainty, so you will never be fully 100% sure. There is just element of uncertainty in trading. This is completely normal, but by us using price action rules and combining them, we can gain confidence in trusting the price action what it's going to do. So let's talk about these setups because this is the pre-market structure before today's session. We started with bearish downtrend, which is a clear pattern. I'm looking for channel. This is the lowest low, and I'm also drawing the short-term channels for the corrections because I'm not only looking for main channels, I'm also looking for the corrections. Two-legged pullback at the key entry point, at the EMA supportive indicator, and this would be high probability setup because the downtrend is new extreme according to trendline rule. So after you break a new extreme, the sellers are pausing looking to sell, and we can expect according to rules correction or reversal. So as you can see, EMA is flattening, price action going up and down is indicating possible consolidation, correction, which means a trend range, so we can predict possible key levels. Once again, redrawing the channel, we have first leg up, break, second leg up, two new extreme, and those two legs are broad, which negates any possibility for broad channel like this. So we know that the uptrend played out, and now we're going to combine once again price action rules. So we traded down, the bias is more bearish, uptrend played out, so the bullish price action rule played out, the trendline rule, and according to range rules, most breakouts will fail. We broke higher in the form of a two-legged pullback, so we can expect right now breakout to fail and go back into trend range. So we have a lower high confirmation setup of the failed breakout, followed by a failed second entry long because all the bulls buying second entry long below EMA, they are going to get trapped. EMA didn't hold, range rules, most breakout will fail. Brand new market geometry allowing us to establish a channel. We have a new extreme, first entry short, pullback, second entry short. EMA rejected once, twice, while this downtrend needs to get new extreme. So this right here is how we're combining price action rules. And what we are looking for, always identifying the context, following the channels, and waiting for high probability setup, two-legged pullback or confirmation setups. Now, downtrend played away to break new extreme, but we traded down into this. I'm not thinking about buying just yet. At the same time, I don't want to be selling because I'm too close to these lows. I cannot be selling. Downtrend played out. Even though we keep working lower, that's not a safe high probability setup. I need to respect the structure, so I'm not buying. I'm not selling. I'm letting the price action develop. This is area of development. You need to have clear picture what the price action is doing, so never be afraid to let price action develop a little bit more. And because we keep trending lower, remember, trendline rule, break new extreme, I expect correction or reversal. Is this acting as a reversal or correction for that matter? It is not. We cannot even push above EMA, and we keep creating lower highs. So this means, okay, downtrend is probably continuing. And if downtrend is continuing, we're not breaking above EMA, this is a sign and good signal for you to look for potential another spike in channel because you don't want to have these candles on the chart without a pattern. Why do we continue to work lower and lower after already breaking new extreme? Probably because there's a brand new pattern developed. So I'm going to draw this. Not the best channel, but it gets the job done for this particular structure. So what's going through your mind? Basically the same thing right here. You would like to see second entry short with correction, at least having an attempt. We have a new low first entry short, and price action keeps breaking higher. So this is not a good sign because we cannot sell second entry short above EMA while the uptrend is in play. So I would need to see at least an attempt for new high, and if that attempt is going to fail and I'm going to get a lower high, that's going to be a good sign I can sell. Okay, we're breaking lower. Can we get some first entry long? Because first entry long, if it fails, would create lower high. And there is no lower high, and we created new extreme. Okay, so no setup here, even though we predicted it. Nothing I can do. Once again, break new low. At this particular time, I'm pausing, looking to sell. because all the information I gather from the market is telling me all the channels that basically I'm able to encounter right now to draw, they played out. So I cannot go short at the bottom. At the same time, I cannot go long just willy-nilly because this was quite a decent bearish structure. So I'm just going to be patiently waiting for market to unfold. Okay, price action broke higher. We're trending lower. I cannot sell into these lows. I cannot go long, even though it may work. You never know how many pushes lower there's going to be. You need to see the failed second entry short reversal pattern. Actually, I'm going to draw a small trend range because we have flat EMA, couple price swings up and down. So let's see what's going to happen. Okay, I'm going to redraw a short-term uptrend because you can see price action keeps working higher. I always want to follow these short-term channels. Break. New extreme. You can see by one tick we created new high. So right now I can see that the uptrend played out. So I'm going to combine a couple price action rules. Uptrend played out. And this was a trend range. Not the cleanest one. Not fully developed. But it is some form of consolidation. So I'm thinking about possible lower high or preferably failed second entry long back into trend range. Because most breakouts will fail at least temporarily. Let's see what's going to happen. But EMA keeps holding, not for long, and price action continue working lower. Now, if I'm gonna zoom back, given how bearish this day is, there is a nice possible wider downtrend, something like this, giving me bearish bias. Notice how well it fits off of these lows. We spike down, two-legged pullback, little consolidation, spike and a channel. Not the best one because there's so much empty room, but today's structure is quite difficult to navigate, so it gets the job done. So because I have now more of a bearish bias, I can combine this channel with the trend range. So I expect right now a lower high confirmation setup to go back down because uptrend played out. Okay, we broke below EMA. That's a sign that I can right now think about lower high. We have a lower high, but the lower high has a horrible bar. I cannot sell as a seller below bullish doji. I want to sell below nice bearish bar. And by the time you get this second bar, double bar entry, it is just way too big. You already created new low here. You know, I cannot risk it. So even though we expect lower high, there is no real easy way for us to take it because the single bar was simply horrible. Okay, this is concerning. We have high low here. Price action keeps working high. Let's see what the channel is going to do. Okay, channel is holding, but we're back above EMA. Okay, this is not the greatest. I'm not really looking to go long. At the same time, we have a mini failed second entry long, but we're still hovering above EMA. Why we didn't break below EMA? And why we have a congestion here, flat EMA. So not a good area to go long. Now this short setup worked for scalp 9 ticks and we go for 8. So this was a perfect scalp, but it is too sideways. It's above EMA, a little bit unclear. So remember, we want everything to align. We don't really want to be second guessing ourselves due to the congestion. And this is concerning. Notice what happened. Another high low, we broke and channel was completely ignored. So at this point, I need to reanalyze the structure. As a trader, I always have to remain objective and I have to keep my ego in check. If something is not happening as I thought, as I analyzed earlier, that doesn't mean that I'm not a good trader. That means I'm going to be patient. I'm going to protect my capital from making bad decisions. And I'm going to right now be patient until all price action rules align. A lot of beginner traders, they always want to be right. They always want to find entry during every stage of the structure. Okay, that's not how trading works. Every strategy has certain rules that you need to follow, and if all the criteria are not met, you cannot execute. And right now I have conflicting variables because the channel is not holding. We are working higher, but this uptrend is not strong at all. This is just very, very weak uptrend. You can see this basically looks like a trading range that is tilted up. So it's really bad to be buying at the top, yet I don't want to be selling because we have high lows. In order for me to sell, I would need to see a really perfect failed second entry long. That's not happening. EMA is holding again and again. We have some small support here. So I'm going to be patient, not thinking about buying, not thinking about selling. We have failed second entry long here, but it is a horrible signal bar. Look at it, tail at the bottom. Look, not full at the EMA, too far down, 2 legs down already. Not a great setup. The market continues back up once again, making this downtrend confusing. But at the same time, this uptrend is so weak that it's really hard to be buying this. Let's see what's going to happen. So once again, be objective, market is never going anywhere. You will not miss anything if you will be a little bit more patient and let price action to develop. Okay, we have a second entry long, but this is not a good setup because it is an inside bar of this big bearish bar and we broke below EMA. Had we at least stayed above EMA, I would have marked it in case you took it because we don't really want to cherry pick. But because we broke below EMA and it is an inside bar and this is a weak uptrend, which means if you find yourself at the top of the push phase, there can be stronger pullback. We cannot really go long just yet. I cannot sell above EMA, but notice what we have now. Big bullish bar above EMA. This is interesting now. This is getting a little bit clear because double trap acts more of a confirmation setup. And this right here is a double trap because all the early bulls and sellers got trapped. Big bullish bar above EMA. This is a little bit now giving us clear confirmation what may happen. There is a push to new high. And right now this is decent high probability setup right here. If you're unsure, you want to see high-low confirmation setup, that never formed. At this point, you can see we have some topping formation. We are breaking lower. Okay, this is good. Market is trending to the downside. Let's see what's going to happen. Now, it's very difficult in this situation to establish which channel we're going to follow, if this tight one or slightly wider one. If you're not sure, remember, you work with the EMA. You want to see EMA acting as a resistance and you want to see some nice high probability setup for us to sell, because at this point I can see, if I'm going to zoom back, this spike candle channel needs to get new extreme. So right now I'm thinking bearish bias and I would like to see second entry short above EMA, excuse me, below EMA, new low, first entry short, can get a second entry short, and there was no second entry short. And because push down is so strong and I expect new low for the main downtrend, I'm even going to make it a little bit wider like this because the bias allows me to make it wider because we need new low for the main channel. So I'm still thinking about second entry short at the EMA. We have first entry short, but EMA is not holding. We're pushing higher, so I need to respect it. Okay, just be objective and patient. If EMA is not holding, draw the short-term correction. By the way, you should have the correction even if the EMA is holding. But this is right now a signal that this correction is definitely in play because we're breaking above EMA. So I'm pausing, looking to sell. Break a new extreme. Perfect. Break below EMA. Downtrend needs new extreme. So I want to see lower high or failed second entry long. Can we get it? We cannot. Now we didn't fully create new low. So there is a still chance we can get some mini second entry short. Can we get it? And there is no second entry short and market continues to work all the way down here to new extreme, no setup, and market is reversing back up. So right now I'm gonna just draw the short and uptrend and I'm gonna zoom back to see what is the structure. So we have a spike down, channel, break of a channel. It took long time here. It was a long confusing break. We have first leg down, break, second leg down. So right now, because the spike and the channel played out, two broad legs to new extreme, I'm expecting right now correction or reversal. At this point, I'm not thinking about selling because all downtrends on our chart played out. So I want to see right now correction or reversal, and the push above EMA, and quite a strong one by the way, is allowing us to take into consideration the fact that we may have right now potential reversal. We have a new high, first entry long, we're not interested. We have a break, mini new extreme, so the downtrend played out with the break in new extreme. EMA rejected once and EMA rejected twice. And great single bar, great second entry long, up Chinese new high going to trendline rule. So you can see downtrend played out, up Chinese new high. This is a second entry long high probability setup, and this right here is the one and only textbook second entry long for the day. Your stop loss goes one tick below the single bar, and look at the trade go. You can see we broke above the key level. It's not acting bearish as a breakout pullback, so I'm going to make sure I'm going to redraw the channel wider, a little bit like this. Okay, you have a small break new extreme. I was playing the wider channel when I was watching this live because the break is so tiny But in order for me to trust buy the channel, I need to see EMA holding, and that never happened. New high first entry long and second entry long, form below EMA, not interested, so I withdrew back, break a new high. So at this point I'm gonna adapt to wide downtrend like this. Can we get a second entry short? New low first entry short? No, only first entry short, back to new extreme. So you can see the trendline rule is being fulfilled. Price action is breaking above EMA, and now it's getting way too late. The market is about to close. Very lackluster price action today, but hopefully it is clear what we are looking for, how we're combining price action rules to help us identify high probability setups. The pre-market structure today was perfect. Regular trading hours, however, didn't really offer that many setups. But remember, your main job as a trader is to protect your capital first and foremost, because if you're going to preserve your capital, you always get to trade the next day when the price action gets better, and there are going to be more setups, more trading opportunities for you to take advantage of. Because especially developing traders, and I've been there myself when I first started trading, when you have few losing trades, you're too emotional in the moment, you're too frustrated, and you feel like the hole you're in is too deep and you want to go all out. You just want to keep trading, and if you're going to blow the account, oh well, I'm just going to start with a brand new account. I'm just going to sign up for a new account. Don't do this. Protect your capital. You're too much in the moment. You're too emotional. You're too frustrated. Take a walk. Stop trading, because what will happen, you will find out. And it happened to me when I first started trading, that if I acted like this the previous day, I came back trading the next day, the price action got better. I had 2 winning trades straight away. And I thought to myself, oh man, had I just stopped trading after those 2 losing trades, I would be back to break even now and nothing would happen. I would still be completely okay, having my capital, be ready to trade. So don't go like this. Don't go all out. The hole is never too deep you're in. You can always make it back. There are always going to be good setups. Don't act emotional. I know it is easier said than done, but I want to assure you that every trader has been through this. We all go through this. Because if you're starting out, you've been doing this for a few months, this is a completely new territory that you find yourself in. And I have a trader who's been trading for 2 months, and he's wondering, why do I feel the FOMO? Why do I feel the need to revenge trade? This is normal. This is new area. Markets and trading is completely mental. There is no physical attribute we need. This is all happening in your head, and you need screen time, okay? It takes time, months, if not years, for you to fully trade those emotions out of you. And you need screen time, you need the experience, you need to lose, you need to get hurt, you need to see losing trades, you need to see your limit order not being filled, you need to see your target profit being bounced on and reversing on you into losing trades, because this is the only way how you're gonna trade those emotions out of you. But you need to be objective, okay? It cannot be just lip service. You need to accept the reality of trading, because sometimes I see these traders, they're gonna miss a setup and they feel sorry for them, okay? They're gonna be like, oh man, this sucks. Or you're going to miss a setup with a limit order, or you're going to have a losing trade, and there's the victim mentality. These tiny little reinforcements, they truly matter. They truly matter, and you always need to combat it with the proper reinforcements. Anything can happen. Losing trades are part of this business. Every moment is unique. You always need to combat these smaller negative emotions with what the reality of trading is about. So when you find yourself complaining, when you find yourself in the victim mentality, I know you think that complaining a little bit is not that bad, but these small little reinforcements matter. You always need to be professional, accept it. Everything is part of trading, and in the long run, it will benefit you much better. So all of these things are completely natural. It will happen. Sometimes you will be staring at this chart for 3 hours and you will take a 5-minute break just at the perfect moment where the best setup will form. This will happen. And the sooner you will accept it, the easier your trading is going to get. It's just another day in the office. It's okay, and keep trading. I'm going to wrap it up, and good luck with your trading.